Good morning, class. Welcome to this session of Strategic Financial Management. And in our last sessions, we had started discussing regarding venture capital funds, and we have already discussed the meaning, how it origin, and how venture capital is going in Indian scenario, the features of venture capital, then methods in which how these venture capital invest in the companies. It could be in the form of equity finance, it is in the form of conditional loans, income note, participating debentures, and few other types of investment. And we also discussed in what sense the venture capital is different from that of investment banking. And we also discussed the stages in venture capital. And in our today's class, we shall study regarding the business plan. Now, it might be for any company. Uh, Now, those who invest will not have any idea or to tell a detailed idea of what the organization is going to do. Therefore, a business plan will always become necessary, and a business plan is expected to be in such a way that it would convince the investor to invest in the company and also let them know what is the plan of the organization and how are they going to do it. So the first step for a company, or for that matter, even an entrepreneur, is to who is who wants to start a new venture by obtaining venture capital is to prepare a business plan. Now, this he or she has to do for the consideration of a venture capitalist. Now, that is necessary because a venture capitalist or those people who invest in other business usually receive hundreds of business plans every year. Okay, and therefore the business plan must convince the venture capitalist that the company, or for that matter the entrepreneur and the management team, have the ability to achieve whatever they have stated in their business plan, and also convince them it is not only on the paper but it is practically possible too. And one thing that we should remember is that there will always be a period attached to it. So, along with the plan, the time is also to be mentioned. Now, the business plan, what the entrepreneur or company comes up, it should explain the nature of the business and also for what purpose they're doing this business. Or, in other words, they'll have to tell what it wants to achieve and the what how is that they're going to achieve it. Now, the venture management should always prepare the plan by setting, a challengeable yet the goals which are achievable. Now, the length of the business plan always depends upon circumstances, but this should not be a very long time period, and also it is better that these business plans should be explained in simple language, and whatever the details, especially when it comes to technical words that might be used, all such things should be mentioned in detail. That is because the words, or what we call as jargons, that the business entities use would definitely be very different from what the common men use. Therefore, it becomes necessary that it should be explained as simple as possible, yet it should be such that which would convince the investors to invest. Now, moving forward, the next one is the essential elements of a business plan. Okay. Now, uh, that is to tell what are the things that are to be included in the business plan. The first one is executive summary. Now, speaking about this executive summary, this is the most important element of every business plan that would be prepared, and it is always recommended that this executive plan would be best if it is written at the end of the business plan. I mean, when the business plan is written, definitely it would be in the beginning, but once after the entire business plan is done, then we have to prepare the executive summary. Or in case, if at all, to give an example, those who have presented any kind of papers in seminar, they would know. Now, executive summary is nothing but like an abstract of the paper. Or if at all you have read any novel, now a brief regarding what the novel is would always be written behind the book. Now, executive summary is the same. It includes the business plan, and always it would be at the front of the document. Now, this executive summary is very important because it gives the summary and significant thought and time, because it will determine the amount of consideration the venture capital investor will give to the detailed proposal. As we discussed earlier, these venture capital investors will have lots of business plan in which they can invest. So definitely they will not have all the time to go through the detailed business plan. And it is in that situation that executive summary becomes important. Because in brief they would read, and if they are interested, then they are going to see it in detail. Now it should be clearly written and also powerfully persuasive in nature, but it should also be same time, it should be a talk which is called as balance sales talks, which would be achievable or which can be done in reality. Now, in order to be convincing, all this nature becomes important for a business plan. Now, this executive summary It is often said that it should be limited not more than to 2 pages and also should include the key elements of the business plan. Now, the second one is, in business plan, we should speak about the background of the venture or the firm. Now, the business plan should, along with other things, provide a summary of the basic nature or the fundamental nature of the venture that is being proposed, and also its activities, and should in brief outline its objectives. Now, this is for new companies, but even for those companies which are already existing, a brief history of the company should be included. Now, the next one is the product or service. Now, the business plan should also explain the firm or the venture's product or service, and it is very important because if the product or service is a technically oriented one, now the investors who are non-specialists should and must understand the plan so that they would invest in your company. Now, the plan should always emphasize either the products or the service competitive edge, or what is its unique selling point or USP. Now, along with that, in brief, it should also describe the different stages of development of the product or of the service. That is to tell, if at all it is a new one, how will be the seed financing done? How would be the early stage of the business? How would be the expansion stage of the business? Along with that, it should explain wherever applicable, if at all there are any kind of legal protections. To speak about that protections like patents pending, or if patents is required. Now, this is important because the proposer of the business plan has obtained on the product these rights and should provide an assessment of how these legal procedures would impact on the marketability of the product. Now, once after you tell in detail the business plan, you tell about the firm, you speak about either the product or the service, then the next one is the market analysis has to be done. Now, this is necessary because the plan should convince the venture capitalist that it is not only on paper but does has a real commercial opportunity for the business and its products and services. Now, this market analysis should offer the one who is reading it or the investor a combination of clear description and analysis. And it is said that it would be better if this market analysis includes a realistic SWOT analysis. Now, SWOT analysis is nothing but you analyze the company based on four elements: the strength the company has, the weaknesses that it has, the opportunities that it would get, and the threats that it will face, and how will it overcome these threats. Now, this market analysis should define the market for their products or services and also explain in which sector or in which industry the venture will be operating. Along with these things, it will also should explain some of the questions like what would be the size of the entire market or whole market. Now, what are the prospects that these markets will have? Now, when we know there are prospects, how developed is the market as whole? Whether the market is developing, whether the market is growing, whether it is already matured, or is it in decline stage. Now, when we know all these things, how does our company fit within this market? Now, who would be our competitors? For what proportion of the market share does our competitors already have? Now, how are we going to position our product or service in a very strategic manner? What are the competitors' strengths and their weaknesses? Now, if at all we are the new entry, what are the barriers that the market have for the new entrants? Along with this, the plan should also describe how would be the distribution channel, and the most important, who are the consumers for the proposed product or service. Now, the plan should also comment on the price sensitivity of the market. That is, if at all in the case of existing company, the plan should explain if at all there are any past problems faced by the business and its products in the market. And also it should speak about have these problems been overcome, and if at all the company has overcome these problems, how did they manage to overcome? And also the market analysis should always give consideration to the current issues, the current concerns and risk which affect the business and the industry in which it is operating. Now, what are the projections for the company and the market? And also, the plan should access in future what are the potential problems that the business is going to face and how will they be tackled, or is it only possible to minimize them, or can these problems be avoided completely? Now, once after the business plan speaks about market analysis, the next thing is it should speak about the marketing. Now, having said all the relevant market and its opportunities, it becomes necessary to speak about how the business that is being, proposed, or this prospective business will take advantage of all this opportunity that it is going to have at its disposal. Now, the plan should always outline or speak about the company's sales and the distribution strategy. Now, that is to tell It should speak about what is the company's planned sales force. Now, what are its strategies for different markets? Now, what distribution channel is company planning to use, and how does this would be compared with the competitors? It should also speak about the plan the company should identify in overseas market, and also act how will the issues that the overseas markets have for them, and how would they be addressed or solved. Now also when we speak about marketing, the plan should also speak about the company's pricing strategy. Now how does this is when the price is compared to that of competitors, if any, and also what are the company's advertising, public relation and promotion plans. Now the next one is business operation. Now when we speak about business operation, the plan should explain how the business operates. Now it should explain how the company makes the products, or how does it going to provide the service that it is speaking of. Now first in brief all these things should be said, and then it should be said in a more detailed way. Now when the product or service is being spoken about, it should also speak about what are the sources of raw materials, who would be the suppliers of the organization. Now, what amount of labors are necessary for coming up with this project? And definitely when we speak about labors, should also tell what is the company's approach when it comes to industrial relations. And somewhere it is also necessary that the plan should also in brief tell the company's approach towards research and development also. Once after this is done, the next thing is the business plan should speak about the management team. Now, this business plan should always speak about or demonstrate, you know, a, a company has a quality management team, and this management team is able to turn the business plan into a reality. Now, the senior management team, ideally should be experienced in the complementary areas, maybe such as finance, marketing, management strategy, and also their roles should be specified. Now, it also becomes important that the special ability of each member brings to the venture should be explained. Or, in other words, a concise curriculum vitae should be included for each team member. Now, this will always highlight the individuals, those who are there in the management, and also their previous track record in how well they are in running the business, being involved in the business, and also how well they can make this venture a successful business. This plan should identify the current ex or explain the method how this management is going to fulfill all this business plan. Now, venture capital firms will sometimes also helps in locating experienced managers who are important for the new ventures, and if at all such posts are vacant. Okay. Now, the plan should also explain the controls, performance measures, and remuneration for management, employees, and all others in the plan. And also, it should speak about the auditors and the other advisors, including what is called as organizational chart. The next one is financial projection. Now, the proposer of the business plan should always consider it using an external accountant to verify and act as devil's advocate. Now, for this part of the plan, now this plan should realistically be assessing sales, cost, cash flow, and working capital also. Now, it should also produce a pro forma profit and loss statement and a balance sheet, and should always ensure that these are easy to update and adjust. Now, it should access the company's present and prospective future margins in detail. Then it should also, when it does this financial projection, should always remember the potential impact of competition and explain the research undertaken to support this assumption. And it should also speak about the company's growth perspectives also. Now, the last one in the business plan is the amount and the use of finance that is necessary, and how the exit opportunities will be there for the venture capitalists. Now, the business plan should also tell how much money is necessary by the business and from what source are they going to get it, and also explain the purpose for which it will be applied. Now, it should also outline the capital structure and ownership before and after financing. Now, it should also consider how the venture capital investors will exit from the investment. Now, speaking about this exit, there are possible exit strategies for the investors, and it includes like floating the company on a stock exchange or selling the company to a trade buyer. Now, all these things are necessary to be mentioned in a business plan. Now, the next topic for discussion is whenever an investor invests in a company, or whenever this venture capitalist decide to invest in some company, what is that they look for, and what are the things that might convince this venture capitalist to invest in a firm. Okay. Now, speaking about this, the venture capitalists, without any doubt, are high risk investors, and when they are ready to accept this risk, they definitely expect a high rate of return on the investment. Now, these venture capitalists, they manage the risk return ratio by investing only in those business which they feel that it would fit their criteria of investment after they complete the due diligence or the detailed study of the business. Now, speaking about it, the fact of the matter, you know, speaking about the capital or the money, is what keeps a business running. Now, this money is not only does a business need you know, to spend on the business in itself, but also to generate a revenue. Now, this operating capital or the money is critical in providing a situation where the business model would work. Now, starting a successful business is not as simple as coming up with the idea or coming up with the business plan, or for that matter, it is not even as easy as raising the capital. Now, the venture capitalists, for that matter, always come across great ideas from different people or hundreds of people, and that is a situation where it would have many factors that influence a venture capitalist's decision to help or to invest in some of the business. Now, these venture capitalists or the investors will always have differing operating approaches, or they will have different strategies why they would invest in some business plan or why they decided not to invest in some plan. Now, these differences may relate to the location of the business, the size of the investment, for that matter, the stage of the company or industry specialization, structure of investment, and involvement of venture capitalists in the company's activities. So, why a venture capitalist will invest depends upon all these factors. So, if at all an entrepreneur or a firm which needs this fund, they come up with the business plan, they give the proposal to our investor, and if at all they do not accept it, the entrepreneur should not be discouraged, because the venture capitalist does not wish to produce with an investment in the company, and this decision of his may not be the result of the quality of the business, but it might rather be a matter of business not being in the criteria or not being fit in the criteria of the venture capitalist, particularly maybe the investment criteria. Now, speaking about this, venture capital is not suitable for all kinds of business. Okay, there are some of the qualities which these investors would expect from a business. Now, speaking about that, the first one is superiority of business or superior businesses. Now, venture capitalists look for companies which has very high quality of products or services and which would be targeted at fast growing markets or untapped markets and which has a defensible strategic position. Now, alternatively, when we speak about leverage management buyouts, these venture capitalists seek companies which has high borrowing capacity, which has stability of earnings and an ability to generate surplus cash to quickly pay off the debt. Now, they also consider the quality and depth of management. Now, venture capitalists must be confident that the firm has the quality and the depth in the management team to achieve its aspirations. Now, the venture capitalists seldom seek managerial control, rather, they want to add value to the investment where they have particular skills, maybe like fundraising, mergers, or acquisition, even in terms of international marketing and networks. Moving forward, it is regarding corporate governance and structure. Now, in many ways, the introduction of venture capitalists is something considered as preparatory to that of public listing or putting company on shares. Now, the venture capitalists will want to always ensure that the investee company has a willingness to adopt to the modern corporate governance standards, uh, maybe such as non-executive directors, including a representative of these venture capitalists, and also that these venture capitalists are put off by now. Now, the appropriate investment structure, along with the requirement of being an attractive business opportunity, the venture capitalists will also be seeking to a structure with a satisfactory deal which produces the anticipated financial returns to investors. Now, the next one that they see is quality leadership. Now, speaking about leader, a great leader can bring his or her vision to fruition and can clearly visualize the final product or service and its market before anyone else in the business can do so. Now, these abilities enable the leader to lead a quality team and run business smoothly, of making decision in the best interest of the company. Now, the venture capitalists want to see a strong leader with a clear vision for their business and a determination to succeed. Now, some of the key factors venture capitalists look for in a founding team are how much experience the founding team has. What is the balance of the team that they have? The next one is speaking about quality leaders. Some of the characteristics are necessary for these leaders. Maybe like coachability, personal connection. Now, speaking about coachability, now this is one of the key aspect venture capitalists looks for in founders. Now, these venture capitalists bring a lot of experience and a strong network that can support early stage companies, and founders who can tap into this have a better chance of success. Now, being open to listening to venture capitalists or advisors who are helping the company is very important. Now, many founders and their teams are sent in their ways or are susceptible to groupthink. Now, if you have seen, that is to tell business owners who won't listen to advice succeed and rarely attract venture capital funding. Now, speaking about personal connection, people love to work with those they enjoy being around and can understand others. Now, developing a strong relationship with venture capitalists is hard, and a warm introduction through their network of investors they have co-invested with or founders in their portfolio is the best way to start cultivating a relationship. Even if they do not invest your current round, you will have a better chance of raising money on the next round. Now, if you understand what metrics or type of companies they invest in. Now, there are still more elements that venture capitalists looks forward when they invest in the company. Now, for this session, let us wind it up here. And for your coming sessions, that is at 12 o'clock, I will send you the link and we can discuss there. I have taken down your attendance. For now, you can leave the meeting. Thank you, class.